Hey everyone, me Kevin here. Today, I'm going short Tesla.
Woo, baby! It was not that long ago that Tesla was the fundamental deal of the century when it was approaching $100 a share. I mean, take a listen.
But not down to $100. That was insane. That was a fundamental deal of the century.
The same clown that promised you the discounted deal that you missed out on is now telling you it's time to short the stock. It almost mind-blowing how much this dude flip-flops, and I'm not trying to batter me, Kevin. We're all a bunch of clowns, but you got to recognize this video is purely made for the beautiful clicks, generating 124,000 views. Now, the real fools are the ones that are actually investing in things like his pricing power ETF that holds the largest position being Tesla, the largest position being Nvidia. And yet, even with these so-called great companies, still over the last year underperforming the S&P 500, and with what really resembles a true YouTuber's investment thesis is insane volatility. I mean, up and downs like there's no tomorrow. You know, one opinion one day changes the next. And obviously as fundamentals change, your opinion should change as well. But I'm but a simple fool, a simple clown amongst the YouTuber finance community. And I think it's so funny, the parodies that are coming off this video, because this is going to go down as something truly iconic. And I'm going to share my opinions on Tesla, whether I'm buying the stock, how I feel about the industry as a whole. And if you appreciate this conversation, as always, consider hitting that like button. But again, focus on it as entertainment, as Chris Norland did here with this. I'll show you a few clips. It's so funny.
Hey everyone, meet Kevin here. Today, I'm going short Tesla. I really hate to say that. It breaks my heart to say that I'm going short Tesla. I feel like I've been stabbed in the back. Stabbed in the back. Me, Kevin, has been stabbed in the back by Elon, by Tesla, by you. You stabbed me in the back. So therefore, I'm going short Tesla. And I want to explain why before you get upset. When you feel that you've been stabbed in the back, me, Kevin, stabbed in the back, I need to stab back.
The
Stabbing
best
people
part
in the
of this
back
entire
is what I
interview,
do.
he goes on
So,
for 3 minutes.
I've been
but
telling you, and I keep...
So the best part is this, right? Because there's this scene that I want to share with you really quick, just kind of toward the end here. It's such a bunch of mumbo jumbo. It's like the most BS video I've ever watched in my life. But this part was just so funny and iconic.
Basically, think of Tesla as like this dirty, coffee-stained napkin, okay? Like, it has a lot of potential. I could unfold it. I could go, oh, I could do a lot of things with this. I could make a paper mache, you know, I could do a little robot or batteries or maybe a semi-truck or whatever. But what are we going to do in the meantime with this? Well, we're going to go in over here and go, Red Sea. Oh, interest rates. Oh, NEM3 and solar. Oh, you know what else? Elon politics. Oh, Twitter financing. Oh,
So this guy does a little parody here.
The more you buy it, the more it craps on you. And I keep buying and buying, and it keeps crapping on me. It keeps crapping on my back, stabbing me in the back. And it's time to crap back. And you know, there's only one thing that I love more than Tesla. It's to help you, help me, help you, to help me. And I've got this brand new symposium in Las Vegas.
Oh,
yes,
so on
Las
point.
Vegas.
Oh my
We're
God.
calling it the Millionaire Symposium. It's only $595, discounted from $19.95. So act now, because prices will be.
This is so beautiful. I don't even know how to express it, but I love that we've been getting other opinions from people like Jeremy here as well. We'll just listen to a little quick clip of this because this is just too much.
Now, what about shorting? So shorting, the bottom line is you should have been going against Tesla stock when I was going against Tesla stock, right? That was when there was money to be made out there, and you didn't really want to short it. You wanted to do what I did when I went against Tesla stock, and that was bought put options. And I made great gains on those. Now at this point in time, I think it's risky, really risky. You already missed the big opportunity. Right? And so I think if you're shorting Tesla stock over this next 3 to 6 months, I think you're trying to chase breadcrumbs here. Little money.
Honestly, I'm not like the hugest fan of Jeremy, but he's on point here. I mean, the fact of the matter is the time to short Tesla stock was like even at the beginning of this year, or basically any time that it rallied back once we started getting the interest rate cycle like 3 or 4 quarters ago when Tesla was saying, hey, things are slowing down. Like Elon said in guidance, right? Like, It's hard out there. We have to cut prices. We've seen margins get squeezed. This, honestly, like I said, Meet Kevin is the Jim Cramer of YouTube, in my opinion, at this point. And I just want to offer some of my opinions on what am I doing, because many of you know that I have been buying Tesla. My average cost right now is around 194. I said I'd be waiting to see, ideally getting around closer to that 150 mark. And I'm shocked that we're actually getting there. And this doesn't deter me at all. That's what I find hilarious, that like in a time where the company's trading at a 37 times multiple, in a time where they're getting absolutely crushed, and it's going to get worse crushed. Like, I'm really anticipating that the stock could potentially go much lower now that the big fund managers that have been buying it have turned on the company, right? So, I mean, there's fear of some wicked downside. That's, look at the volatility in the stock. Like, that's what you're buying, right? Like, I mean, it is a fact of reality in the market environment. Things are slowing. It's likely we're not going to see any real revenue growth maybe until the latter half of this year. But why? Well, I think somebody made a good point in our chat group, thanks to the patron members that are continue to kind of just chat with me on a daily basis here. He said, yes, it is similar to how Rockefeller grew Standard Oil. You sacrifice some of your own profit margins in the near term by cutting prices, but longer term, you're bankrupting the competition who operate at higher cost. We are currently in a market environment where car sales are down. And unfortunately, EVs are luxury cars for most major auto brands, and people right now cannot afford them at the current interest rates. Tesla has been the only EV company that has had the margin to cut those prices and sustain sales, whereas Fisker's going bankrupt, Lucid is on the door of bankruptcy, NIO's getting bankrupted here, Rivian, all these companies need major funding. Most of these are not going to survive the next year. And these are most of the pure play EVs, with perhaps the exception of BYD. But then what does it mean for the other major autos? I mean, you can look at things like GM, right? Like GM's been pulling back on their EV division, trading at a 5 times multiple. And heck, maybe that's what Tesla deserves. Maybe Tesla just is a car company and it should be trading at a 5 to 10 times multiple. Who really knows, right? But basically, Mercedes-Benz just announced that they're going to be backing off to sell pure EVs by 2030. They're no longer going to be one of these EV leaders. They don't want to be. They want to keep it diverse. They don't think that there's huge demand for it right now, right? So basically, not even in Europe, where EV sales growth outpaced North America's, does Mercedes expect the transition to EVs to EV-only sales anytime soon. The company's CEO, Ola, from whatever told Reuters, it's not going to be 100% in 2030, obviously, from the whole European market, but probably from the Mercedes side as well. His comments basically are at the latest from an auto executive to express more caution about the EV future. Tesla's CEO Elon Musk warned that the company is bracing for significantly slower sales growth in 2024, while EV-only companies like Rivian and Lucid said they expect production to stay flat this year. Other companies like GM and Ford have delayed factory construction or canceled models altogether. So what does this mean for the entirety of the industry? What does this mean for the position that I've been taking on in Tesla stock? Well, you have to believe one of two fundamental realities here. You either believe that EVs are more efficient than internal combustion, that they inevitably cost less for maintenance, repairs, they save you from going to a gas station, they allow you to plug in like you would your phone at night, or you believe that they are not more efficient, they are not going to replace traditional autos over time, and that's just how it's going to remain. And you're really only in one of those two camps. Now, if you are in the camp that EVs are the future, Tesla is continuing to secure their foothold. They have a monopoly in the entire industry, from the infrastructure to the broader perspective of even self-driving that only Google right now is probably the closest competitor to. They're becoming a monopoly in so many different sectors of the auto market in and of itself that, if they sustain that, and it looks like they're growing share because all these other companies are losing and failing miserably and pushing everything back, whereas Tesla's still full steam ahead and coming out with new models and has full production plans expanding into 2025 with so much going on that, yeah, there may have been delays, may not have been perfect by all means. But if you honestly believe that this is the future, you're starting to get it at one hell of a discount. I truly believe that in the next 5 to 10 years, it's not going to be a far cry of a stretch to think that Tesla cannot double what they've done already here. For this to be trading at 1.5 trillion seems reasonable to me. You might not agree, but that's why I said, once this thing gets down into the 100s, I'd start accumulating. I bought quite a few shares by almost $10,000 worth, and I plan on scaling that to double or triple that size position in the next 3, 6, 12 months. I'm really looking at accumulating probably around this price. I might pick some up tomorrow. I might wait a little longer, but you know, I could be wrong, and you can watch this entire investment blow up in my face. First time I bought Tesla back in 2019, the stock dropped dramatically. I think it tanked like 50%. It did the same thing in 2020. I've watched the stock drop time and time again, and I told you I did not own Tesla stock up here. I sold out of these gains, but you have to recognize a company when you see value that you think is value. It might not be the value you see, but it's the value I see, and I'm a clown on the internet, so take that for what it's worth. But please, for the love of God, meet Kevin's meet Kevin. Just don't listen to us. Just buy the S&P, do the smart thing, and retire rich and retire early.